You were listening to chartingwealth.com for Wednesday, the 30th of May, 2018. We have our book for sale. Thank you for everyone who has purchased it. Charting Your Way to Wealth. You'll see at the top right-hand portion of the screen a link that will give you a short video about the book with a link where you can purchase it. It's all you need to know to understand what it is we do here at Charting Wealth every single day so you can start on the road to becoming a charting master. It's some of the most important information you need if you want to have financial independence in your future via the stock market. We truly believe that this is the key, and we want you to have it. And of course, join us every day for free here at chartingwealth.com, where we do our daily market reviews 4 days of the week. And of course, on Friday, we produce the comprehensive review and forecast. Every day the market's open, we are here. We want you to be with us. Now, let's jump right into these markets. Interesting things going on as we get past the Memorial Day holiday. We see the S&P 500 down for the day 1.12%. The Q's down 0.45%. Bonds, and of course we saw this coming, didn't we, with our weekly vertical crossover up 2.18%. Gold is flat. Now let's jump first into the S&P 500. Of course, we talked about this topping off, and let's go to the weekly chart first, and we'll show you where things started topping off over the last 2 weeks, right around the 272 mark or so. And we did see the weekly, we saw the weekly derivative oscillator crossover going up back in the prior week, and it's still in the green. But what we saw happen over the course of the day was a big down day for the S&P 500, and it did not make it through on a weekly vertical crossover. And so far, first day of the latest 5-day candle, actually heading down, bouncing off the red signal line so far. Now, it's just the first day of a 5-day candle. Doesn't mean that is not subject to change. As we look at the 2-day chart, that's where we can really see the topping out and things going flat on the market and then starting to rotate over. Derivative oscillators started losing energy over the last couple of 2-day candles. And of course, what we saw happen on this latest 2-day candle, again, just the first day of the latest 2-day candle, big down candle. And of course, the price percent oscillator rotate over going down. Derivative oscillator has been losing power for the last 3 candles so far. So we have a big red down candle on the 2-day right now. What's going on that 4-hour chart? Been in the negative quite a while, hasn't it? Going all the way back to the Friday the 18th of May. And again, we can still see that sideways slide going all the way back to sometime around the 14th as things have tracked sideways and really started rolling over going down. So that's where we are as far as the S&P 500 goes. We now, and again, just continue to watch. We don't have anything setting up just yet. We may have a down play that might start itself, but we continue to see that derivative oscillator in the positive. So let's just watch it. With just one down day, the first day of the week, doesn't mean everything's crashing and burning. What do we see going on the Qs? Well, of course, the Qs has also been hitting sort of up around the 170 spot or so, sort of topping out there, 169, 170. It did, however, cross over at the end of the last week, a weekly vertical crossover. And of course, we told you to keep your eye on things. We look at the 2-day chart. It crossed over going up back on the 4th. But we gave you that fair warning, and we see that the derivative oscillator's losing momentum. Price percent oscillator has gone flat, but we said now with this weekly vertical crossover to be very cognizant of what was going on in the morning. And of course, when we look at that 4-hour chart, we can see where it started off very negative in the morning and increased that in the afternoon. So of course, we did not have a jumping in point after that weekly vertical crossover. Just did not come to fruition at this point. Doesn't mean that it might not happen later in the week. So we look at the 2-day chart. It has not crossed over going down. It's still confirmed up, as is the weekly. So again, just the first day of the week going negative does not mean that we might not have a jumping in point. We may, and we'll continue to keep our eye on the cues and just see what happens. We just are too early into things to see what's going to transpire in the future, but there was no jumping in point on Tuesday morning. Now, let's go back to our weekly chart and continue to follow up what happened to TLT. 20-year bonds crossed over going up at the end of last week on that weekly chart, and we see on Monday a big up day, up 2.18%. And as we watch those things, we see the derivative oscillators heading up strongly, price percent oscillator heading up strongly. We did have that weekly vertical crossover. We look at that 2-day chart. What do we see? Well, of course, the 2-day chart also rotated over going up, and we see it continuing to build. And again, that's just the first day of the latest 2-day candle. As we take a look at the 4-hour chart, what do we see going on there? Well, it continued to build up strongly. If we look at that 30-minute chart as to how the markets opened around 10:30 in the morning, and of course, don't forget, idiot hour, we rule out. We don't want to jump in at that point. Things, again, up strong at the 9 o'clock hour, and then as we look at what happened around 10:30, a little bit of cooling off, and then started zooming up again at 11, and that 11 candle started really the big climb for the rest of the morning, leveled off a little bit around 2 o'clock, and then popped up further in the afternoon. So we did have a decent jumping in point on that 30-minute chart, and of course on your 4-hour chart, same thing. You had up movement in the morning and a buy-in around noon, which would have continued to zoom you up with that weekly vertical crossover. And again, this is a tough time of year. We keep saying sell in May and go away is what happens to so many people in the market because a lot of the volume goes out and the big traders are not necessarily there. And what we saw happen today was nice. Doesn't always happen in the summertime. We'll see how that continues to work out for the remainder of the week going forward. Now, lastly, we will take a look at gold. Gold, of course, has been in a confirmed down move on both the weekly for quite a while, going all the way back to the 16th of March. Almost said May, way back. And then what do we see also? Well, it is, again, continuing to gain momentum on the derivative oscillator, price percent oscillator headed down. So far, first day of the latest 5-day candle, we see a green up candle, but again, things are flat as far as price movement goes. The 2-day chart, actually, we can see that it's a doji, meaning lots of indecision, tending down, price movement still below the weekly trend line, and we really haven't been able to redraw a 2-day trend line at this point. Derivative oscillator continuing to lose momentum. And again, price percent oscillator flat, well, a little less than flat, sort of heading up just a little bit. As we look at that 4-hour chart, what do we see? Well, we can see where it sort of topped off somewhere back around the 123.70 mark or so, all the way back to Thursday, the 24th in the morning, and has really been sliding sideways, tending down. The derivative oscillator is losing momentum. Price percent oscillator still headed up, so we'll continue to keep our eye on that 4-hour chart, see where it leads us. Of course, if it starts to roll over going down, we are primed, as we said at the end of last week, with a down move on the weekly and the 2-day to jump into a down move on gold. So keep your powder dry, pay attention to what's going on in gold, and we might have an inverse move in gold to get in. And again, like we said, things have triggered for a play up on TLT, so I hope you're doing a virtual practice trade on that. Keep your eye on the cues just in case it does set itself up for an up play. Again, just the first day of the week with about a half-point down movement doesn't mean there's not going to be a play due to that weekly vertical crossover going up later in the week. Folks, that's where we are as we end the day. We do encourage you to buy our book and help support us here at our site. We provide all this information to you for free every day. We hope you find it valuable. 10 minutes is all we ask. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.